Last week, I wrote an article questioning gold's rally and wondered if a bigger pullback was brewing. Now, it's based purely on technicals, but it might now have the fundamentals to back that up. So here's the article in question, and the main observation was that this could be the first month since November that gold prices have not broken above the prior month's high. Now fast forward to today, with less than 2 days of the month remaining, it seems extremely unlikely that gold will hit a record high by Friday. In fact, it's on track to form a spinning top doji, which suggests weakness to the trend. The last time that gold failed to take out the prior month's high, it resulted in a 2-month pullback. Now, to be fair, that 2-month pullback was pretty shallow, and the second month was an inside month, meaning it didn't break to a fresh monthly low. But there is a strong case for the US dollar to rally and for lust for gold to dwindle. So let's talk tariffs. A US federal court has just ruled that President Trump's tariffs are illegal and therefore blocked. That is a huge step back for the administration. And while I'm sure the Supreme Court will get involved and maybe rule in his favour, that's not going to be quick. And that basically means that appetite for risk has returned and the US dollar looks oversold. Looking at recent positioning data from the COT report shows that traders reduced their net short exposure to the US dollar by $5 billion last week alone from arguably oversold levels. And that was after an extended sell-off, so today's news will likely trigger more dollar short covering, and the risk on rally means gold could continue to lose its appeal. So let's take a closer look at the charts. So the weekly chart shows this very strong trend, although price action got really choppy around the highs below 3,500. Even if we just get a modest pullback to the 23.6 Fibonacci ratio, that could still see prices move down to around 3,060, and even a 38.2, which is perfect normal in a long-term uptrend, could see prices down to 2,787. The daily chart shows that this strong rally has ended with an ABC correction, but now the game has changed. We can consider the potential for at least a double or triple zigzag. Like I said before, even a move to the 23.6 could see it down to 3,060 thereabouts, but of course we've got support around 3,000, which is also near the February high around 2,973. So at the moment, if I'm correct in thinking the dollar is going to rally quite hard from here and demand for gold dwindles, I think we could at least be looking for a pullback to 3,060, 3,070 over the near term. Beyond that, I think I'm still open to new highs. I just don't think this correction is over just yet. So in a nutshell, the court ruling against Trump's tariffs is net positive for risk and therefore net negative for gold. Adding to that problem for gold bulls will be that an oversold US dollar has further upside to go, because the big reason it was falling in the first place is because of Trump's tariffs, which have now been removed. In theory, gold could be facing some selling pressures ahead.